So Kevin explains crypto this week. One of my favorite terms, and a term that's come up quite often in the office as of late, market makers. Right on. So this is not a crypto term per se, obviously. And to be honest, I don't know how many real market makers actually exist in crypto. I would say the number is as close to zero as you can get without being zero. So I don't, however mathematically advanced you are, you either think that number is one or it's something much smaller than that. 0 dot infinity zeros, one, or some type of abstract numeral. Anyway, so market makers. So what does market makers mean? Well, simply put, a market maker is someone who makes a market. Right? What does that mean? That means that, well, you can't have a market unless someone provides liquidity to that market, right? You need to have a seller when there's a buyer, and you need to have a buyer when there's a seller, right? If you want to buy something but nobody's selling, you can't buy it, right? If you want to sell something and nobody's buying, you can't sell it. A market maker's core job is to make sure that when there's a buyer, they are on the sell side. And when there's a seller, they're there to buy. That's it. Market makers are not there to induce price movements. They're not in there to necessarily increase volumes. They're not there to push price in one direction or the other. They're simply there to be either on the buy or sell side of an order to make sure that at the end of the day, the orders can be filled. That's what market makers do. Without market makers, there is no market. Now, outside of this explanation, understand that market makers get a bad rap. In FX, people think that there was this time, and maybe that time still exists. People go, you know what? I was trading at this exchange or at this broker, and they were running their own book, and they were trading against me. All right. In reality, someone is always trading against you. That's how markets work, right? If you're buying and your order gets filled, how do you think it's getting filled? With somebody else buying? Obviously not. Somebody else is selling into your buy or buying into your sell, which means every time you take an order, someone's trading against you. Now, what's the difference if the person trading against you is the company you're trading with or an outside party? Is there really a difference? I think that comes from the most part that people don't understand how markets work. Market makers are needed. Without somebody making a market, there's no market. Okay.